Fears over the slowdown of the world's economy comes to focus in Davos, where top politicians and business leaders converge for the World Economic Forum. Hello and thank you for joining us on Global Business as we bring you the latest developments on the business front from within the continent. From Nairobi to Johannesburg, Cairo to Lagos, we shall be bringing you stories that are hitting business headlines tonight. I am Penina Karibe from the Kenyan capital, Nairobi. It's about 9 p.m. here in East Africa, wherever you're joining us from. Welcome to the show. Coming up, high drama in Kenya as communication authorities clash with media owners over digital signals distribution. And new laws are proposed to govern mining industry in South Africa, but not all are happy. Let's begin here in Kenya. The Communications Authority has barred 3 local media houses from rolling out their own digital signal distribution platform. The regulator has also stopped the organizations from importing set-top boxes that will enable viewers access their networks. This follows a controversial advertisement by Royal Media, Nation Media Group and Standard Group instructing consumers not to purchase set-top boxes from pay channels, StarTimes and GoTV. The broadcasters say the pay TV channels have been relaying their signals illegally. However, CAK says the advertisement is misleading. The 3 media houses have been locked in court battles with the watchdog over its issuance of digital transmission services. They are planning on launching their own digital services later this month after a court granted orders to roll out the platform. Now, it seems South Africa's controversial mineral resources bill is far from being finalized. President Jacob Zuma has sent the bill back to Parliament for a review. Amendments to the bill were made at the beginning of 2014. President Zuma believes the bill does not pass the test constitutionally. Sumitra Naidu tells us more.
The new Mineral Resources Bill has undergone several changes, but the draft legislation aimed at regulating the industry has yet to be passed. One issue of contention is around how mining licenses are awarded. New changes are also designed to create more clarity and align the bill with laws that are aimed at protecting the environment. But some believe the legislation in its current form flouts international trade laws.
There are a lot of problems with the bill in terms of the discretion that it gives the Minister of Mineral Resources in relation to beneficiation, in relation to controls of strategic minerals, around licensing applications where they've changed the whole licensing system.
The draft bill also called for a new definition on beneficiation to be inserted into the Act, increase social development as a spin-off from mining and integrate administrative processes relating to mining rights.
This bill tries to implement a more intrusive approach around beneficiation in the sense that the Minister of Mineral Resources under the bill has the power to designate minerals for beneficiation. Mining companies who have those minerals designated have to supply those minerals to local manufacturers at an agreed price or a mine gate price, which is not necessarily market value.
Some quarters are pleased the bill has been sent back to Parliament, but the Chamber of Mines says the delays in finalizing the bill is creating uncertainty for investors. But some industry players say it's better to have more clarity on issues that affect the country. It also states that government automatically gains a 20% stake in new oil and gas projects in the country.
For any government to expect a 20% free ride, it means that other people have to cough up the capital, and that's not sustainable. And certainly now that the oil prices are at an all-time low, or a 6-year low, it's very clear that it's not a sustainable proposition.
South Africa's mining industry contributes 18% of the country's GDP. It is also a key export sector and generates more than 50% of South Africa's foreign exchange earnings.
Mining is a consumable industry, and it needs replenishment all the time. And as soon as the investment environment is not competitive, the mining house just stops investing further, and eventually that investment will liquidate itself, and the mining house will take fresh capital and apply it elsewhere in a more friendly environment or jurisdiction.
The bill's return to Parliament doesn't necessarily mean it will be amended. President Jacob Zuma will have to substantiate his reasons for rejecting the new laws. Sumitra Naidu, CCTV, Johannesburg.
Ghana will give public sector workers a 13% pay rise this year, the first increase since 2013, and the government froze annual increments as part of efforts to cut spending. Ghana is in talks with the International Monetary Fund on a bailout program to fix its fiscal problems, which include a wide budget deficit, partly caused by government salaries. Deputy Finance Minister Kasiel Attofoson said the increment was agreed after talks with labor unions and will come into effect this month. He's assured the country remains within the budget limit discussed with the IMF. Foreign direct investment in Rwanda fell last year because of the uncertain global outlook and a reduction in business travelers to the country following the Ebola outbreak in West Africa. The country attracted $390 million in projects compared with $445 million a year earlier. Francis Gatare, CEO of Rwanda Development Board, pegged the 12% decline to global economic trends like reduced commodity prices and rising costs of manufactured products. The nation mainly drew smaller scale projects valued at $20 million or less last year, which are expected to create some 10,000 jobs. The biggest investment was a $157 million commitment by US-based Symbion Power for a 50-megawatt methane gas project at Lake Kivu in the west. More than 2,500 of the world's political and financial leaders are in the Swiss ski resort of Davos to attend the annual World Economic Forum. Participants at the forum include heads of state from the G20 and other nations, including China, and leaders of the world's largest and most successful businesses. China has sent its strongest delegation in years, led by Premier Li Keqiang, Central Bank Governor Zhou Xiaochuan, Alibaba founder Jack Ma, and electronics giant Huawei President Ren Changfei are also among the Chinese elite on hand for the 4 days of networking and debate. 5 of the forum sessions will focus on the outlook for the Chinese economy and outbound investment. Now, with concerns that the global economy is still struggling to grow this year, leaders and economists from around the world are gathering in Davos to discuss the new grim global context. Our correspondent Chang Lan has more.
What does 2015 hold in store for the world's economy? The questions bring more than 2,500 political and business leaders in this small Alps resort of Davos. Don't expect them to solve the problems here. What they do is share ideas. As always, there's a lot to talk about. Falling prices in the Eurozone will be a major topic. It's put pressure on the European Central Bank to come up with a stimulus plan this week.
Will they do it? Yes. And Thursday, they'll probably announce a bond buying program that's about 500 billion euros. And that will be a good step forward. We don't think it's enough, but it will be a good first step in terms of trying to get Eurozone growth going, try to eliminate the risk of deflation.
A lot of interest will be on oil prices, which have fallen nearly 60% since June last year. With oil company chiefs and policymakers attending, a lot of questions will be asked about the future of the energy market.
As there are very few countries that are all exporters, where the drop in oil price may exacerbate a number of risks. It may lead to a slower economic growth, to unemployment, to a number of social issues as well. This could result in many other risks as well, have many cascading effects even on the geopolitical situation as well.
Emerging markets are also expected to be on course for a difficult year. To boost confidence, Chinese Premier Li Keqiang is heading to Davos this week. His keynote speech will explain the new dynamics of the Chinese economy.
We expect, or we believe, that he will be briefing us on China's vision for its economic development and for its future place in the world. So we're very much looking forward to that.
I know that he will always say something very significant on behalf of a rising country, which is now the second largest economy in the world, and which is taking an increasing part of the responsibility of how the world will be governed. So I really look forward to meeting him and to hear his speech in Davos. And what he will say, I think we will hear when he is there.
And then there's geopolitical risks, climate change, cybersecurity, and even Ebola. Undoubtedly, the full-day agenda has plenty to cover. Zhang Lan, CCTV, Davos.
So let's get more now from Jack Button, who's live for us from Davos, and Yasser Hakim is live in Cairo. Thank you both for joining us. Jack, let me begin with you. Chinese Premier Li Keqiang has just made his eagerly awaited address. What were the highlights?
Well, that's right. This address would have been eagerly anticipated any year just because of the rarity of Chinese leaders or senior Chinese leaders speaking here. But given that it came just one day after the economic news out that China's economy had slowed to the most in 24 years, this was eagerly anticipated. And Premier Li did spell out in some detail how China intends to move forward, some of the reforms it intends to carry out. And he did lay out, of course, ideas that were very receptive to delegates here, that the process of opening up China's markets would continue. The process of opening up the services sector would continue across all aspects of the services sectors, including the finance sector, which many people here want greater access to. He said ultimately Chinese companies, foreign firms would have a complete equal treatment in China, and he summed up the Beijing's philosophy towards the economic management at the moment as a metaphor. He compared it to the Swiss philosophy towards their great love of skiing. He said you need to choose the right speed, maintain balance, and have courage.
Jack, as the top politicians and business leaders meet, there is grave concern about the gap between rich and poor. An Oxfam report says the world's wealthiest 1% will own more than the rest of the world. So are there indications there is will to narrow this gap?
Well, there's certainly a lot of talk about narrowing it, but that gap doesn't seem to be narrowing. It seems to be widening. Back in 2013, that was identified by the World Economic Forum's team of experts in a poll as the #1 risk factor for economic and social risks over the coming decade. But it seems to have been pushed to the back burner even as the same time as that gap has widened. And Oxfam now also saying that by 2016, the top 1% will control more than half of all of the world's wealth. It's a very complex issue. Some of the ideas here, of course, is less emphasis on shareholders, more emphasis on long-term growth for the company and raising wages. But it also comes down to another fundamental problem that's been discussed here at the previous World Economic Forum, and it's just the way that manufacturing and the distribution process have completely changed over the past 20 years. Thanks to the internet and thanks to robots and mechanization, it's just wiped out a lot of the blue-collar workforce, so you're left with people getting more wealth at the top of the company and just more low-skilled labor, with that lower middle class essentially being wiped out. There's no easy answer to that solution. Now, the IMF has said that growing inequality is an impediment to global economic growth, though clearly not to the top 1%.
Right. Yes, so let me come to you. Egypt's President Abdel Fattah al-Sisi is in Davos, and he's there basically seeking to promote Egypt's economic agenda. So what are the expectations there in Cairo?
There's huge expectations here, and just to tell you that Sisi is the first president to go to Davos for 11 years. So this shows how important the Economic Forum is for Egypt this year in particular. And it's not about signing any contracts or getting deals done in Davos, but it's more about laying out the plans, Egypt's plans, the economic plans for the international business community, and also to try to invite as much as he can the investors and leaders to Egypt in the economic summit slated for next March, which is known as the Egypt Friends Summit, which Egypt hopes would help garner investments and funding for the economic reform policies that the country is undergoing.
Right. Jack, coming to you, the talk has been Africanizing for a while now. So would you say there is still keen interest on the continent among investors, especially with the slow growth across the globe?
Oh, there's a lot of talk about all aspects of the African economy and its growing interconnectedness with the rest of the world. Just before Premier Li spoke, there was a large panel discussion on growth in Africa. On that panel were people like Paul Kagame, Rwanda's president, also Jacob Zuma, the president of South Africa. And they, along with a lot of other delegates here, remain cautiously optimistic because as a region, growth still remains relatively strong at around 5% in Africa, very strong compared to other areas like the European Union. Most of the basic statistics are rising. There's more than 24 countries in sub-Saharan Africa now that has a higher than $1,000 per capita income. Infant mortality is falling across the board. Education is rising. And a lot of those indicators, economic indicators, are growing healthily across the board. So there's still a lot of positive sentiment despite, and everybody admits this, there are enormous challenges to be dealt with, particularly in the rising security threat of terrorism over the past few years. But to give an indicator of what momentum is being given here, we've heard that last year the African Union's initiative of Growth Africa, which seeks to raise more capital, more innovation for agriculture in Africa, that raised $10 billion worth of pledges at the World Economic Forum last year.
Right. Yes, coming to you, I would imagine there's a very keen interest amongst the Egyptians on what exactly is going to happen in Davos. I mean, like you mentioned, quite significant. First Egyptian president to attend those talks in 11 years. So what is likely to be the highlight of President Sisi's address?
Well, there'll be one political and one economic. The political side is he's trying to convince the international community that he is working hard and successfully on combating or countering the terrorism in Egypt and trying to restore stability and safety to gain the confidence of investors that they can come here and invest in safe area without the fear of terrorism or political instability. The second is the economic side, laying down the economic reform plan, all the facilities that he can provide for investments. Egypt has a lot of problems, especially with bureaucracy and not really being one of the countries that are known to be easy with foreign investments, especially with the law that needs to be vitally changed a lot. So he's going to talk about how he will be facilitating the economic atmosphere for foreign investors and also the political side, which is combating terrorism and restoring stability in the streets.
Right, Yasser, thanks very much for those insights. Yasser Hakim live in Cairo, Jack Button live in Davos. Interesting conversations and insights. Thank you both for joining us. Well, so let's take a quick look now at the markets. And most of the bourses that we track here on Global Bees ended the day in the green, except for the Nigerian oil share, which dipped by just about 0.25%, almost 0.25%. And coming up here on Global Bees, the cost of electricity in Uganda has gone up by 2.1%. We'll tell you why. Plus, President Obama outlines proposals to enhance cybersecurity, but are industry players convinced they will be effective?
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Watching Global Business, welcome back. Now, Uganda has increased power tariffs by 2.1%. The country's power regulator attributes the rise to the weakening of its local currency against the dollar, among other factors. CCTV's Isabel Nakiria reports.
After a quarterly review by Uganda's Electricity Regulatory Authority, customers will have to pay 2.1% more for their power. The government says the weakened Uganda shilling against the US dollar has affected power production costs.
Majorly, the exchange rate is the biggest driver of this tariff. If we had had a favorable exchange rate in the quarter that closed, or probably in the last 2 quarters of 2014, the tariff would have been different from what it has been. And even with the regulator coming up with this 2% increment, it has been out of prudent scrutiny.
This is the third time in the last 12 months that the government has increased power tariffs. Inflation and global energy prices also contribute to the rise in power costs. Uganda uses more hydro than thermal electricity, so falling world oil prices have not contributed to a reduction in Uganda's electricity tariffs. The government says the tariff is manageable and hopes a stable currency can be maintained by the central bank.
So if the exchange rate is managed well by the central bank, like what I'm seeing, this tariff should be able to oscillate, go beyond 530, probably 525, 528 or 27, something like that. And if the factors become better, the next tariff review, it can easily go much lower than it is.
The local currency hit a 4-year low this January compared to the same period in 2011. Financial market analysts say it could go even lower.
The outlook is for a very bearish shilling going forward. I can say that we should brace ourselves for a weaker currency going forward. My own simple projection is 29.50 is the next support level, a psychological mark that we are likely to breach within a week.
This means Ugandans face the possibility of further rises in power tariffs and other prices. Currently, about 12% of the population uses electricity, and Uganda is investing in power generation. Uganda's target is to quadruple its electricity output in 5 years, which it hopes could lower the power tariffs. In the short time, however, there could be price rises around the corner. Isabel Nakiria, CCTV, Kampala.
The State of the Union address made by United States President Barack Obama sought to fight for the plight of the middle class in the world's largest economy. Among the things mentioned was cybersecurity, of which the president wants Congress to pass legislation which requires companies to notify customers if their data has been compromised. Now, President Obama also called for a law that would promote information sharing between the government and the private sector. CCTV's Jim Spellman in Washington walks us through the address that comes in the wake of the hack against Sony late November last year.
On President Obama's State of the Union agenda, new cybersecurity proposals meant to better protect individuals and businesses from hackers.
It's one of the most serious economic and national security challenges we face as a nation. Foreign governments, criminals, and hackers probe America's computer networks every single day.
The recent Sony hack brought increased attention to cybersecurity, while attacks on Home Depot and Target put the credit card data of millions of consumers at risk. Obama will propose a set of reforms including increased powers for law enforcement agencies fighting cybercrime, better protection from identity theft, and more data sharing between the private sector and the government, potentially the most difficult issue.
Sometimes it's still too hard for government to share threat information with companies. Sometimes it's still too hard for companies to share information about cyber threats with the government.
Included in the proposed reforms, so-called breach notification requirements, meaning companies must inform consumers within 30 days of being hacked. Some companies have resisted such measures, reluctant to reveal vulnerabilities that could damage the company's reputation or stock prices. Alan Friedman is a cybersecurity expert. He says the proposed regulations are a good start, but won't solve the problem.
These certainly wouldn't have stopped Sony. They wouldn't have stopped the Target or Home Depot attacks. So we need to move forward and continue with thinking about how do we create a market for cybersecurity. Ultimately, it's going to be a private sector solution. But the government needs to look and honestly consider why the market isn't working.
In February, the White House will host a cybersecurity and consumer protection summit, bringing together government officials and tech industry leaders as President Obama tries to move these cybersecurity reforms beyond State of the Union talking points and into law. Jim Spellman, CCTV, Washington.
Price less than two commodities prices now. In Wednesday trading, oil prices still lingered under $50 a barrel. Even though cocoa futures were down by over 1%, there is a backlog of supply building up in the world's top exporter of the commodity, Cote d'Ivoire. Tight inspection and clearance procedures there have more or less doubled the time it takes to ship out products. All right. right, so let's take you to Nigeria now, where political campaigns are underway ahead of the presidential elections, which are due on February 14th. Africa's biggest economy is struggling at the moment as a result of dwindling revenues occasioned by falling oil prices. But as Deji Batmas tells us in this report, the situation does not seem to be taking a toll on the ongoing political campaigns.
Nigeria may be going through a rough economic patch at the moment, but it's simply business as usual in politics. Some analysts are even predicting this could turn out to be the most expensive presidential campaigns in the country's political history. Now, that is despite the fact that the actual period for campaigning before election is very short this time. Nigeria's Electoral Act prescribes a presidential candidate can spend no more than 1 billion naira, that's about $6 million, for presidential campaigns. But in reality, this is a far cry from what politicians actually spend. One man who knows so much is Chiman Naji, who once ran for governorship of his state.
1 billion naira, can it pay for the flight bills, the charter bills of a private jet that freight, these candidates from one corner of the country to another? Can it pay for the hotel bills? Let's take, for example, the major political parties, especially those who did their primaries outside the national headquarters. People had to be lodged, and candidates bore the bills of many of those people who attended the event so that they can settle, they can vote for them.
Campaign posters now flood more places than in previous elections. You find these posters everywhere in the country, jostling for people's attention. And sometimes you think the posters are cheap, but in fact, they are not. They are quite expensive. We understand 5,000 copies of these posters actually go for 150,000 naira. That's about $1,000. And the candidate needs to print millions of copies to make any impact. And then you have the rallies. Candidates now hold daily campaign rallies across the country. And guess what? Rallies are now bigger and more expensively organized than in the past.
If you want to hazard a guess, there's no rally that can cost, especially for the presidential rallies, no matter how prudent you want to be, none of the rallies can come short of 1 billion naira. Because you are not talking about the music, you're not talking about the feeding, you're not talking about the drinks, you're not talking about the logistics, you're not talking about accommodation, okay? You're also talking about the cash that will be shared among the plenitude of those people that you see in the rally.
And the expenses don't just end with the rallies, he says. Election day expenditure is key.
The voting day is the God knows what day. That is the day if you are out of cash in our climb. Cash, not promises. No credit. No checks. If you are out of cash, you are most likely to lose that election.
For now, with no one apparently calling them to check, the politicians are spending way beyond the prescribed limits to get the votes. Deji Batmas, CCTV, Lagos, Nigeria.
And that's it for this edition of Global Business. Do send your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Biz on Twitter using the handle at CCTV News Africa. I am Penina Karibe. Thanks for watching.